Investors have their attention fixed on today's 330 billion naira T-bills auction. Now on the bond side, renewed buy interest is seen on the belly of the curve, especially the 2033 and 2034 papers. Anthony Aigbokhan, Treasury Team Member at Axis Bank, joins us now for more market movements. Anthony, thanks a lot for joining us on the show today. It's been quite a busy week. Yesterday, we saw the liquidity dip on the back of the OMO maturity. Walk us through movements we've seen in the market at this moment, starting with liquidity.
Thank you very much for having me. I will start with the money market updates. So far, we haven't been able to get the updated market liquidity figures from the CBN website because the CBN is currently conducting a disaster recovery test. However, the latest data shows that market liquidity was at a negative of 90 billion naira with OPR rates at 32%. We expect those market liquidity to improve because there was an OMO maturity of over 800 billion that matured yesterday into the system.
Now, let's also look at how sentiments have been so far. Now, we're seeing the mid-dated maturities getting a lot of momentum. And looking at today's Treasury bills auction of 330 billion naira now, what do you think the sentiments would hold today?
Okay, so there's an NTB auction going today where the CBN is offering 330 billion, as you rightly mentioned. We expect the rates to hover around the similar levels where the last auction closed. We're seeing the longest dated paper probably closing at 16.5%. Yesterday, the market was a bit quiet, a bit calm, as people were anticipating the auction for today. So we should expect to see rates closing at the last, around the last levels that the auction was.
And talking about auctions as well now and movements when we're looking at the bond market, we're seeing some renewed buy interest on the belly of the bond curve. When we're looking at the 2033, 2034, we're seeing them trade as low as 17.4%. Walk us through the drivers of the sentiment here and why investors are pretty cautious on the 2032 paper.
Okay, so on the bond side, you know, at the last auction, the DMO more or less raised more than or supplied more than what the market was expecting. So what we saw was a bit of increase in rates across the board. So what we have seen that people are more interested in the belly of the curve, seeing that the rates there are more likely the highest rates amongst all the bonds that are currently available in the market. Particularly we see on the 2032s, 2033s, and also the 2034. So that's where most of the action is at currently. We saw some buying interests yesterday. So the rates across the curve declined marginally by 5%. So there's also going to be another bond auction on Monday. So we expect that to dictate the pace of how the market is going to be. Also, the bond auction, the NTB auction of today too, might also give us a clear indication as to how the government is trying to raise debt, and we also see that would have an impact on the rates across the belly of the curve.
Anthony, now, the government is very clear with its borrowing plans right now. We saw the Q3 bond calendar right now. But how do you think investors are pricing in on the offers so far, particularly for mid-dated to early-dated bonds?
Okay, so I think the investors are also still interested in those papers. We've seen that the carry trade where people borrow in and invest in Nigeria has been very, very active. So we've seen investors come in to buy these bonds on the 2029, which is the short end of the curve. We've also seen the long end hasn't been that much active, although we've seen a bit of interest, particularly on the 2050s. So we think that there is more interest on the mid-dated papers, largely because of the rates on those papers. They are the highest earning rates. So that's where more of the action is. But of course, we've seen some bit of interest both on the 2029s and also on the 2050s.
And what insights do you also have for us when we're looking at trading action in the FX market? We're seeing rates still elevated due to limited dollar supply, but in terms of the pressure points at this moment, the push demand and supply metrics, what's going on there? What should you expect near term for the rest of this month?
Okay, so in the Nigerian foreign exchange market, what we have noticed is a bit of calm sentiment. We've seen the volatility reduced in that market. We've also seen that the central bank is willing to come in and participate as a willing seller of dollars to the market. So what we've noticed is the CBN came in, I think last time was on Friday, but this week we haven't really seen them come into the market. So we've seen a bit of depreciation on the rates, particularly on the official rate where it closed yesterday at 1534 levels. Also the NAFEX rate has also fixed at 1535. So going into the week and also going into the month as well, we still expect the central bank to come into the market as a winning supplier to intervene and make sure. I think what they are trying to do is they're trying to ensure that the rate doesn't depreciate too far. I think maybe they have set a limit of sorts around 1540, 1535 levels. So we see that whenever the rate is trending towards those levels, we see the CBN come into the market. And not just only the CBN, we've also seen foreign investors coming in. We see that the carry trade of borrowing in selling the dollar and buying the naira is a very, very profitable trade, and we've seen a lot of foreign investors come in. So we expect to see rates still hover around 1535 to 1540 levels.
Anthony, before we let you go now, what are your expectations for Monday's bond auction?
Okay, on Monday's bond auction, what we expect to see the rates hover around the 17% levels. We saw that one of the securities that is being offered at the auction, so we still expect the rate to close around 17.5 levels.